Welcome to this explainer. Today we're diving deep into the raw, absolutely dramatic story of Robert Kiyosaki to extract a true step-by-step masterclass on building wealth from absolutely nothing. Look, if you've ever felt completely tapped out, staring at a negative bank balance and feeling like you're starting from a massive disadvantage, or if you simply want a clear, structured blueprint for financial independence, you are in exactly the right place. We are going to look closely at the exact philosophy, the grinding psychology, and the real practical actions that took a man from having nothing but the clothes on his back to total, unshakable financial freedom. Let's start with a serious reality check. Picture this. It's 1985, and Robert and his wife Kim have hit absolute rock bottom. I mean, they were essentially homeless, living out of a beat-up brown Toyota. Their credit cards were completely maxed out, and they had just a few dollars to their name. Try to imagine the sensory reality of that for a moment. Think about the cramped, freezing car seats at night. Think about the relentless stress and the complete exhaustion of having nowhere to turn. It got so desperate that they ended up living in a friend's tiny basement for 9 months just to try and find their footing. Imagine carrying that immense pressure in your mid-30s. And yet, less than a decade later, by 1994, at ages 47 and 37, they had achieved complete financial freedom. They built a system so robust that they never had to work another day in their lives. Now, it's really easy to look at a story like Kiyosaki's and think, sure, but he just got lucky. He caught a real estate boom. Or he must have had some kind of safety net. There's this pervasive myth out there that wealth is always inherited, right? That you need a trust fund or a network of high-level connections from birth. But the data reveals a powerful counter to that excuse. Get this. 80% of millionaires are actually first generation. That means they had absolutely zero inheritance, they started with zero connections, they built their wealth entirely from the ground up, navigating the exact same obstacles you face every day. Luck didn't make them rich. His deeply ingrained mindset and his daily choices did. So, how did he do it? Today, we're going to break down his remarkable journey into 5 specific, actionable steps. We'll cover the wealthy mindset, financial education, seizing opportunities, persevering through failures, and building passive assets. By the end of this explainer, you'll have everything you need to construct your own roadmap to financial freedom based on these exact principles. Let's jump right in with step 1, the wealthy mindset. The foundation of this entire blueprint doesn't cost a single cent, but it does require a fundamental, radical shift in how you view your future. Long before the money actually arrived, Kiyosaki made a firm, non-negotiable decision that he would be rich. Growing up, he absorbed 2 fiercely competing philosophies. First, you have the poor mindset. This teaches you to cling to the illusion of security, to keep your head down, and basically trade your hours for a safe paycheck. But then, you have the rich mindset. This one teaches you to chase opportunity, to accept calculated risk, and to build systems that make money work for you. He explicitly chose the latter. Even while shivering in those car seats, he completely refused to let his temporary circumstances dictate his identity. Honestly, the one thing holding most people back is a deep-seated degree of self-doubt. You have to actively decide to adopt the mindset of chasing opportunity. This concept is perfectly encapsulated in one of his most famous quotes. Broke is temporary, poor is eternal. You absolutely must treat your broke state as a temporary challenge to overcome, not as a permanent identity. Think about it. Being broke is simply a math problem you haven't solved yet. Being poor, however, is a disease of the mind. It's a state of accepting defeat. When you view your lack of funds as a permanent state, your brain's chemistry actually changes. It just stops looking for solutions because it's already accepted the loss. But when you frame broke as a temporary hurdle, your mind goes right to work attempting to solve the puzzle. Which leads us directly to step 2, financial education. Once you have the mindset firmly in place, you have to invest in your absolute greatest asset, and that is your mind. When you have no money, knowledge is your new money. Kiyosaki warns us, money without financial intelligence is money soon gone. Earning money is completely pointless if you don't actually know how to keep it, protect it from taxes legally, and grow it. If you somehow get rich quick but lack financial savvy, you'll inevitably lose it all. We see it happen all the time, right? This is exactly why he devoured education on accounting basics. And hey, financial intelligence for a beginner doesn't mean having a fancy Wall Street degree. It just means understanding how to read a basic balance sheet, knowing the difference between good debt and bad debt, and grasping how interest rates impact your buying power. To put this into perspective, consider this number. Studies show that 80% of millionaires read at least 50 books a year, many of them centered around business, history, and self-improvement. They never stop learning, because they understand that continuous self-education is the literal currency of the wealthy. And you don't need a massive budget to start doing this right now. If you're short on time, listen to audiobooks during your daily commute. Play educational podcasts while you're at the gym or folding laundry. Whether it's books, videos, or finding a mentor, aggressively filling your mind with actionable knowledge is the highest yield investment you can possibly make when you're starting from zero. All right, let's move on to step 3, seizing opportunities. What's truly fascinating here is how you put that knowledge into action when your bank account is sitting at zero. At age 30, Kiyosaki wasn't just sitting around waiting for a miracle check or a perfect business plan to fall from the sky. He started right where he was. He noticed a very simple problem during a regular trip to the beach. Surfers had nowhere to put their wallets while they were out on the water. He didn't form a massive committee or overthink it for years. No way. He immediately launched a company making nylon Velcro surfer wallets. That single, simple observation turned into a business that was featured in Playboy and Newsweek, and it made him a millionaire on paper. The crucial takeaway here is that when you have no money, your hustle and your relentless creativity are your primary capital. Don't wait for perfect conditions, because perfect conditions simply do not exist. Furthermore, you must eliminate the phrase, "I can't afford it," from your vocabulary entirely. Saying, "I can't afford it," literally shuts down your brain. It ends the conversation. Instead, start asking, "How can I afford it?" That one question forces your brain to actively search for creative solutions. This naturally leads to a massive concept, OPM, or other people's money. When Kiyosaki later moved into real estate, he used loans and investor money to acquire properties. Think about how leverage works for a second. You borrow money from a bank at a fixed rate to buy an asset, like a rental property. The tenant's rent pays off the bank's loan, covers the expenses, and leaves you with a profit, all while the property appreciates. You literally use the bank's money to build your own wealth. It takes courage and a trained eye for value, not necessarily your own cash, to make money. Now we have to talk about the hard stuff. Step 4, persevering through failures. This step is so critical because it is exactly where most people pack up and quit. The road from nothing to wealth isn't a beautiful, clean, straight line upward. It is heavily paved with spectacular, agonizing failures. Remember those surfer wallets we just talked about? Well, the company eventually went bankrupt because he hadn't properly secured his patents. He watched his incredible early success completely crumble to dust. Then he tried a rock band t-shirt licensing company. That failed too. He tried various investments and actually ended up nearly $1 million in debt in the 1980s. Let that sink in for a second. Nearly $1 million in debt during an era of insanely high interest rates, before he even found himself sleeping in that brown Toyota. But look at this staggering number, 3.5. That is how many times the average millionaire goes bankrupt in their life. The key difference between those millionaires and everyone else is their psychological response to defeat. They simply do not stop. They treat failure as a necessary data point. It's a testing mechanism, not a permanent character flaw or a dead end. Studies consistently show that grit, the psychological ability to persevere and maintain passion toward long-term goals despite massive setbacks, is a far better predictor of success than raw IQ or natural talent. Kiyosaki didn't throw a pity party. He clinically analyzed his failures, adjusted his strategies based on the new data, and came back smarter. And finally, that brings us to the Holy Grail. Step 5, building passive assets. This is the ultimate engine of financial freedom. The whole goal here is to stop trading your precious, limited time for money and to build an automated system that works for you relentlessly. Kiyosaki provides a beautifully simple definition that strips away all the complex, intimidating financial jargon. An asset is simply something that puts money in your pocket, regardless of whether you are awake, asleep, on vacation, or sick in bed. If it generates income independently of your hourly labor, it is an asset. In today's modern world, this could be a traditional rental property or dividend-paying stocks, sure, but it could also be a digital side hustle. Think book royalties, a software application, an online course, or a digital product. The golden rule is this: assets put money in, liabilities take money out. It sounds so incredibly simple, but it is the hardest thing to execute because of human ego. When Robert and Kim were starting out, they lived incredibly cheaply. Remember, they lived in a friend's basement for 9 months. Why? Because they understood the massive power of delayed gratification. They wanted to pour every single spare dollar into acquiring real estate assets during a market downturn. They strictly avoided buying liabilities, like fancy cars, designer clothes, or huge houses bought on credit, until the passive income generated by their assets could pay for those luxuries entirely on autopilot. Escaping the rat race really relies on an unglamorous but highly effective formula. Step 1.
Spend less than you earn. Step 2, invest the difference into assets consistently. Step 3, let your passive income grow until it totally eclipses your monthly living expenses. Kiyosaki teaches a brilliant mental framework for this. Once a dollar goes into your asset column, you must think of it as your dedicated employee. Every dollar you save and invest is a little worker. And the best thing about that dollar? It works 24 hours a day, it never takes a sick day, it never asks for a vacation, and it can work for generations, constantly multiplying your wealth while you sleep. Your job is to hire as many of those little dollar employees as possible, and let them do the heavy lifting of building your financial empire.
So as we wrap up this explainer, I want to leave you with a real challenge. You've just seen the detailed step-by-step blueprint from someone who started completely broke in a beat-up Toyota and fought his way to total financial freedom. Now it comes down to your personal action. What will your first asset be? Are you going to let self-doubt win and stay right in your comfort zone complaining about the economy? Or are you going to use your creativity, take a step of faith today, and start building the exact asset that changes your life and the lives of your family? Think deeply about that and start building today.